Good morning, TheoTraders. Hello, hello. How's everyone doing this morning? It's Mac here, back again for this really interestingly volatile overnight session that we're coming out of on the indices and the S&P especially. The Dow is leading to the downside today off of some software earnings after the bell yesterday. They're being taken pretty negatively. Tesla's down as well. It was up 4%. Now it's down. Last I checked, about 3 or a little bit more than 3%. So a little bit of back and forth action in Tesla that we're going to take a look at before the opening bell today. But the bigger story that's driving the Dow downward, which is down a little bit over 50 basis points this morning, is that software down move, especially in IBM and Now. And so, these may actually this is on regular trading hours, but you can see IBM is all the way down here. I'll bring this over to a daily chart so we can see that better. So IBM is down big time in the overnight session, down 7.68% right now after reporting earnings yesterday at the end of the day after the bell. And that is basically restoking the software. The reaction to the earnings, at least, is restoking the software fears, the disruption fears, this idea that their business models are going to be really substantially disrupted by AI, and that that is potentially happening in real time. ServiceNow is down 13% overnight. So another software name really getting taken out to the woodshed after reporting earnings last night. Microsoft is getting some selling coming in here as well. Nothing too drastic, but erasing yesterday's move and a little bit more than that so far, down 2.5%. And then I have a few other names here that I noticed because we've talked about them a couple times in the last couple weeks. But Intuit is one, and it's down 3.8%. And App, a little bit more of a tech name, but also in the software space. More constructive chart here on the daily chart, but just erasing yesterday's move and just going through these to highlight that software is really one of the really big driving factors that's bringing prices down this morning from the overnight session. Datadog is another name, down 3%, which is another software name. Once again, a little bit more of a constructive setup here on Datadog. It did make a higher high there. But so that is one of the main things to watch. And then basically we've had quite the volatile and sort of algorithmic overnight session here. Crude oil is marginally up, but there was this big move up, which from all that I could find was based on rumor last night at about 8 or 9 p.m. Again, it was just rumors, so I am not 100% sure if what information was getting passed around. But basically, there was a gigantic move where crude oil was up about $3 in maybe 10, 15 minutes. And that ended up marking the overnight high. So it's kind of an interesting day here where, yes, the indices are down for overnight, and we're going to have a gap down likely here. But the reality is that they have recovered quite substantially from their overnight lows. And crude oil, while being up, has faded quite substantially from its overnight highs. So crude oil was up at, WTI crude oil was up at 97.30 in the overnight session, and now just kind of chopping around and holding slightly above flat. Brent crude is similar situation with Brent crude, so it was up just over $106 in the overnight session, and now just under $103. I mentioned those rumors. The ones that I had heard was that there were potentially rumors that there had been explosions, or that there was an attack ongoing in Iran, maybe some airstrikes or something like that. And apparently that was not the case. Maybe there was something else that was driving that. There you go. There was an anti-aircraft drill in Tehran, got reported as an attack from the U.S. Interesting. Okay. Yeah, I appreciate the context there, Taylor. Because I was not seeing more specifics. I heard some rumors about that, but the rally faded so quickly that seemed, pretty clearly like that's all that it was the rumors. So we're entering in today with, another thing that's interesting. It's kind of an interesting session. I mean, the Russell is actually not set to gap down. And you would think if the concern was going to be inflationary today, you would think that you would have crude oil up a little bit more, and you would have the Russell down with the rest of the indices. So to my eye, the move down in the Dow and the S&P is really, really focused on the software and AI disruption story for the time being, at least, from some of those earnings that came out yesterday from some of those larger companies. And then we look at Tesla, of course. Tesla, where's Tesla here? So Tesla is gapping down as well. Last I checked, of course, would be typical to get a implied volatility crush today after the earnings. So that might provide a stabilizing force. It's down 3.4% in the after hours here. And this is going to be interesting within the context of these VWAP levels that I use as well, because this is kind of coming down to some potential support areas already in the overnight session. This is an anchored VWAP from the April 2025 tariffs low, which is at 697 here on Tesla. And value area low for 2026 is also here at 374. Pardon me, did I say 697? 367. So this 367, 374 area on Tesla, I would not be surprised to see some strength or consolidation show up there. How we doing, everyone? See more people filtering in here as we get closer to the open. Anything that anyone else is looking at from the overnight session that we haven't touched on so far? Expected move was $21 for Tesla. Andy is pointing out $6 left to go. Yeah, it'll be interesting. We were obviously up here at the 200-day moving average and year-to-date VWAP before the earnings the last few days. So we'll see if there is a little bit of a implied volatility crush again that might provide some decreased volatility or some pinning action over the course of the day as options positions adjust. Oh, interesting, Gaston. Are nuclear stocks up? I saw that uranium has been doing well. Let's see how that's doing today. And I know Oklo has been mentioned a few times in here. Yeah, so uranium's up again today. Oklo, what are the other? SMR had a great day yesterday. These higher beta ones. Is Oklo up again overnight? Yep. Yeah, so Oklo's up 9% in the overnight session. Certainly could be a big breakout here. These are a few names to watch. Absolutely, especially Oklo. Me personally, at least, I like to look on Oklo here potentially a little bit more than SMR and NNE. NNE is actually looking pretty good as well. Did get a close above 2026 VWAP yesterday. So I would not be surprised to see this come up to the 200-day moving average, which is all the way up at 32. But these are, of course, very, very high beta stocks. The basically Oklo, SMR, and NNE, all three of which have really are very, very early stage. So yeah, exactly. Yeah, Oklo. Don mentions Oklo, the company headquarters in a crappy strip mall. Yeah, these are more very, very thematic and are not driven by fundamentals or earnings at this point. But we do have the uranium ETF potentially coming up to what could be a longer-term breakout if it continues strength the next few days. So this is one to watch on the commodity side, and is definitely going to be not quite as volatile as as some of those other nuclear stocks. Let's see here. Crypto, I was talking a lot about yesterday. I am potentially potentially becoming very bullish on crypto here. At least that is my outlook, especially as long as Bitcoin is holding above 74,000, which is a year-to-date VWAP, and even above 70,000. So started entering into some bullish crypto positions yesterday. Even MSTR, I discussed one position in particular yesterday, but I actually I sold some in the money put spreads, some deep in the money put spreads for July on MSTR that I was able to enter for a credit rather than a debit. Obviously, very expensive options on MSTR. But my risk, I went with a 40-point spread, and so these two gray lines here are highlighting my long put strike on the lower end and my short put strike on the higher end. So that would correspond with a move up to the 200-day moving average if we are going to get a stronger move in crypto, which I do believe is becoming a real possibility here, to see an extension and a pretty sharp rally in crypto, actually. So this allowed me to get into a 3-to-1 risk reward position for a credit, actually, and not having to be in a position of paying for time value on that position as it deteriorates day by day and as we get the time decay. So that's one unorthodox way that I started positioning into crypto over the last 24 and 48 hours here. I also did the same thing on Circle with out of the money. I don't have my strikes here, but these were up. I'd have to check. I believe it was 150 to 200. So really, really, really deep in the money put spreads. But again, entering with a position that has a small delta right now. It's actually offering 3-to-1 or a little bit better on some of these, and being able to enter for a credit was attractive, because a lot of these crypto names do have really expensive options, both on the implied volatility front and then, of course, getting some pretty serious time decay. Yep. So on the indices also, I want to touch on, let's see where the S&P is at now. Yeah, basically still holding kind of around the middle of the range of the overnight session. We did get a really sharp recovery. So the S&P was down as much as 65 points on the futures last night, and then it recovered the entire thing, almost turned green on the day as of about an hour ago, and now we've faded off of that a little bit. What I am going to be watching and looking to position into today is going to be some downside exposure. So very, very, I do think that we've had a notable slowdown in the rally the last few days on the indices, and a little bit of a divergence that we had yesterday, that even though it was a very bullish day overall, it was quite notable to me that the NASDAQ made a new high yesterday, and all three of the other indices did not. And I'm not so much concerned with an all-time high divergence here. Things are looking healthy from a trend and from a bullish thesis perspective, coming out of a very important macro higher low here, as far as the systems that I use to position in the markets. So coming out of that here. But just in the last few days, the S&P still hasn't taken out its high from Friday of last week. If we go over to the Russell still hasn't taken out its high of what essentially was a rejection candle or a reversal candle on Tuesday of this week. Got some constructive price action today in the overnight session so far. What are the DTE on those spreads? Those are for July 17th, Matt. And I'll actually pull those up here so we can take a look at those, because it's kind of an unorthodox position, but it is a method of getting a high reward to risk on that trade. So my Thinkorswim's been a little bit slow this morning, but getting that loaded up here. And then so the Dow just again had basically a little bit of a rejection candle on Tuesday with the Russell. That was the day of the Kevin Warsh confirmation hearing as well. So the high from that day is holding for the time being. That was also the day that the ceasefire was actually announced. And so on the Dow here, uh, I'm bullish. I'm positioned bullish. I'm not betting on downside necessarily, but I am net anticipating a little bit of downside over the next few days. So would not at all be surprised to see the Dow come down a bit over 1,000 points back to 2026 VWAP here. That would be pretty typical of a rejection of value area high on a first attempt to cross over. So I'll be looking for the Dow to potentially come down to about 48,800 on the Dow futures, maybe a little bit lower than that, about 48,500. On the S&P, that would likely correspond to a return to 7,000. And so that is the level that I'm watching for there. If what we're seeing here is basically a rejection candle on several indices on Tuesday, followed by some consolidation, maybe a slow rollover. We did see a lot of call buying the last few days. So, a lot of the times when we get these really sharp rallies and people have to capitulate at the very top, especially once we actually finally make new all-time highs, a lot of the time we do get a, sort of 2 to 4% pullback. And that is essentially what I am looking for as the most likely outcome over the next few days within my own system. We have the oscillators rolling over a little bit here on daily charts. This is not a very bearish look here for me, but it's just confirming that we've been losing momentum, and I'll be looking for that little bit of a pullback, first pullback of this new rally and this new trend move higher. And then I'll be looking to add bullish positions back into that after decreasing some of those and decreasing some of my net debit positions over the last few days, and looking to increase my overall portfolio theta that I'm bringing in time decay on a daily basis by being in some more credit-focused positions rather than debit-focused positions. And so, yeah, about 7,000 on the S&P. That's going to be value area high for 2026, and also former all-time highs. So that's about 7,000 on the ES futures. On the S&P index, that is corresponding with about 69.90. And the next thing that I'm looking for is if we are to get a more aggressive move down, would be the S&P index to come down to about 6850, 6900 area. And that is actually an area where I've been structuring some hedges in the last few days. If my Thinkorswim can cooperate here, I'll be able to showcase one of those hedges that I'm looking at, but within Thinkorswim at least. But just to discuss it, it is ultimately, this would be banking on a return into value area here. And again, I do have a lot of long exposure right now, so considering these more as a hedge rather than a directional bet or something that I would put a large portion of my portfolio into. But basically structures in the S&P index that I can get into. I've been looking at the May 1st expiration for next Friday, maybe the May 8th expiration, giving a little bit, paying for a little bit more time value, a little bit more flexibility from the position if we do continue to consolidate at highs here. But those are some of the structures that I'm potentially going to be positioning into. Spreads on the S&P where there's a long put at about 6950, short put at about 6900. And I've also been looking at actually some in the money call spreads once again as a way of getting a credit for that positioning, having a low delta on entry, and potentially having an opportunity for the delta to expand if the S&P does move down, and if those in the money call spreads sold for a credit turn into become out of the money, so they're being sold in the money, and they would potentially end up being out of the money. And those are another way that I'm looking at where it is possible to position into something that would reward $4 for $1 of risk if we are to get a 2 to 3% pullback on the S&P index. That is basically what I am watching for right now. And let's see here, finally getting Thinkorswim rolling here. Let's take a look at the MSTR position. But it's going to be a very interesting and very consequential few days on the indices. Certainly momentum has slowed down, and so getting a little bit of consolidation here. Let's see, Russell's still set to open a little bit green on the day. Pretty much holding the little bit of the overnight move off the lows and off the highs for the overnight session as we get closer and closer here to the regular trading hours session. Okay, here we go. Just trying to get that MSTR position here. I'm going to pull up the Analyze tab. So I'll do this. What else do we have? What else do we have, folks, taking a look at this morning? Has anyone been following CAR or any of the other storylines going on in markets? Anyone have any interesting positions on that they're keeping an eye on for the next couple of days that we can pull up here? Let me get the Analyze tab set up here. This is going to be the MSTR position. And I also have a calendar spread on, so I'm going to remove that. That benefited from the increase in implied volatility yesterday on the move up. So this is, I unchecked the May 8th option that's part of a calendar spread. And what we're looking at here is that July 17th expiration that I have, which is a two short 240 puts in the money and two long 200 puts in the money on MSTR. And you can see here, if we go out to June and say on June 26th, if we are getting a new trending bullish environment in crypto, were that to occur on June 26th, if MSTR is up at 195, which is not too far from current price here. So 179 right now on MSTR. MSTR at 195 is where the position would be flat on June 26th. And then if we are going to get a move up to basically the 200-day moving average, is what I'm betting on here, up at 220, we're MSTR to get up to 220. And of course, these are not completely exact. And there's, of course, the little more emphasis on the first four letters. How do you mean? I'm not sure what you mean on that, Doji. Oh, nice. Yeah, shorter put on MSTR. Terry has that short put. See. Yeah, let's take a look at IonQ as well. And now appreciate the shout outs there, everyone. But yeah, just to highlight the end of this MSTR position here. Up at 220, I would be doubling the risk that I have. So because I went with a 40-point spread instead, someone could go with a 10-point, 20, 30-point spread, whatever was appropriate risk-wise. Because I went with a 40-point spread, my risk on this is $950 per spread. And I stand to gain as much as $3,050. I do not anticipate closing it out for that, but that would be if the position expired fully in the money. which would basically take MSTR closing and finishing July 17th above the 200-day moving average. So that's why I structured my strikes at this particular price, because this would be a return to the 200-day moving average for MSTR. And as you can see here, even at the end of June, if this does get up even to 220 or say 230, that is going to more than double my risk on this position. And it would do it quickly as well. If we were to get a move like that by May 12th, just to pick a random date, that is going from a current price at about 180, 179, moving up to just 200 would nearly get a one-to-one return over the course of just a couple weeks. And if we get even more of an acceleration, that would be getting pretty close to doubling my risk that I took on that position. So, oh, okay. Oh, sorry about that. Yeah, I'm still getting used to some of the inside jokes here. So, okay, let's take a look at a few of those other tickers before we get Don on here for the day. Again, this shorter time frame chart is a 1 hour chart. I'm looking at potentially month anchored VWAP. So that's this yellow line here. That's where I'm structuring some of the context for potential SPX hedges I'm looking to put on. Again, I'm very long SPX at the moment, so they are hedges that I'm looking to put on as opposed to a heavy directional bet or something like that. But this would be a return to month anchored VWAP, which would be quite typical of a bullish trend. So that is 68.80 and rising right now. And these are the levels that I'm looking at. If we get a less aggressive pullback, I'm looking at the SPX potentially coming down to 7,000. If we get a more aggressive pullback with some nasty macro headlines, looking for it to come back to about 6850, 6800 area. And I would be, if that occurred, this would be basically a back up the truck sort of bullish entry if there is price action strength at that level, not just because it reaches that level, but if there's price action strength coming off of this 2026 VWAP and anchored VWAP off of the low within the context of a new rally, that would be very bullish for me. Speaking of anchored VWAPs, I just wanted to point this out for the time being, that WTI crude had a near perfect rejection overnight of the anchored VWAPs anchored to both of the recent high dates. And so that is quite notable. As far as crude oil goes, I would not be surprised to see crude oil start to fade more here, but we'll have to see whether that happens or not. Obviously, it's moving to a great degree, is moving off of headlines. So, and now we're seeing a little bit of volatility pick up again. So on the indices. Okay, let's take a look at some of the tickers that we had folks shouting out. IonQ. I've been bullish on Quantum and IonQ the last few days, although it is interesting that it's definitely run into some selling here in my eyes at the 200-day moving average. So this is very bullish within my system that IonQ is now nicely above 2026 VWAP. It can return to this area of heavy consolidation from the end of last year. And it is above the 200-day moving average and has closed above that a couple times. But of course, that is typically an area of heavy liquidity, and we've had some rejection candles here. So there have been sellers that have come in to get out of IonQ. From my perspective here, I still am maintaining my long exposure there in IonQ, and if IonQ breaks below about 45. I will decrease my long exposure, and I'd be anticipating it to come down closer to about 40, which is a spot that I would be looking to add back on some long exposure, assuming the overall bullish trend is in good shape on the indices. If we go over to D-Wave Quantum, another quantum name here, QBTS, this one has not quite been as strong as IonQ. So again, IonQ has been leading the quantum names in terms of relative strength. And so again, that's a little bit of a signal that, makes me pump the brakes a little bit on the quantum theme right now. They're definitely in a bullish environment in my eye, but I would not be surprised to see us take it would not be very surprising if this pulls back or even consolidates for weeks, in my eye. So let's see what else we have here before we get Don. Don's coming on here real soon. Better. That's an interesting one. I haven't heard of that. Heard of BETR before. Better Home and Finance. Okay. It's a holding company. Kind of interesting. Nice little uptrend. It did get a little bit of a rejection of 2025 VWAP area up there within a couple of dollars. But certainly holding trends. So this is the type of chart I could see potentially entering into if this came down closer to about 40.39 area. If it doesn't make it down there, then anticipate further strength and further up move there. Let's take a look here. Okay, we are gonna get Don on here in a couple minutes. We have someone mention ServiceNow. We touched on ServiceNow at the start of our session here, but ServiceNow and IBM are getting taken to the woodshed overnight after earnings, and that is a significant contributor to the gap down that we're going to get on indices, especially on the Dow today. So software back in the crosshairs. Are these companies going to be losers of the AI adoption and revolution on a longer term basis? We'll have to see, but so far the market is working on pricing that in. So we have IBM gapping down big time. That's hurting the Dow, and ServiceNow as well with a big gap down. And then some of the other software names are moving in concert, including Microsoft and Intuit as some other examples. Oh, all good. No worries. Yeah, I appreciate you highlighting now, so we were able to pull that up. And see, we'll get Don on here in a moment. But okay, yeah, just to recap, for the morning session here, we're in a new bullish trend in my system that I use on the indices. Looking for that to continue. Very, very open to the possibility of a 100 to 200 point pullback over the course of several days, within the context of a larger trend on the indices. And I'm going to be pricing some hedges deep out of the money here today, and that is what I'm looking at for now. All right, I am going to pass this over to Don here. Everyone have a great rest of your day. Am I still long JPM? Long a little bit. I decreased that position some, so long a little bit of JPM. All right, have a good one, everyone.
I'm a chicken fried and cold beer on a Friday night, a pair of jeans that fit just right, and the radio. Whoa, whoa, whoa. Well, I was raised up beneath the shade of a Georgia pine, and that's home, you know. Sweet tea, pecan pie, and homemade wine, where the peaches grow. In my house, it's not much to talk about, but it's filled when love is grown in southern ground, and a little bit of chicken fried. Cold beer on a Friday night, a pair of jeans that fit just right, and the radio. I like to see sunrise, see the love in my woman's eyes, feel the touch of a precious child and know a mother's love. It's funny how it's the little things in life that mean the most, not where you live, what you drive, or the price tag on your clothes. There's no dollar sign on a piece of mind, this I've come to know. So if you agree, have a drink with me, raise your glasses for a toast to a little bit of chicken fried and cold beer on a Friday night. A pair of jeans.
All right, sit down. It's time to get started this morning. I am Don Kaufman. Welcome, everybody. It's TheoTrade chat. It's a Thursday morning. Oh, yeah, there's just over 2 minutes to go to the cash open. It's been a fairly volatile evening. I mean, the S&Ps right now are down some 24, but I'll start in the S&Ps, and with the fact that there's volume, we are seeing size. What that implies, there's going to be some volatility today. I said that in last night's video too. You knew that there was a crap load of gamma risk last night, and we haven't moved in the entire week. Like literally, if you look at this week, and I'm just going to kind of zoom in to the week at large. The week at large, there's Monday, there's Tuesday, here we are Wednesday. We haven't done anything. I mean, that line is exactly where the week started. So we're going to open right in this neighborhood over here. It's a very nice neighborhood. And I'm going to tell you right off the bat, with some size trading in here, expect some volatility this morning. And I'm also going to say with Microsoft taking this kind of a hit, you should probably anticipate some pressure coming to the NASDAQ as well as Tesla. Tesla's not down massively, okay, but Tesla is taking a bit of a hit into the cash open. It's earnings, all right? It's earnings season, people. So as we come into this cash open, two of your major tech companies are down. There's nothing but bids under the other ones. So it's hard to actually read, Broadcom right now. It's a wide bid offer spread, but this has actually been up, ironically up most of the morning. Taking a look at NVIDIA is actually going to open a little stronger relative to the remainder of the market or the rest of the market. Volatility is not necessarily portraying a tremendous amount of risk coming in, but we'll see if that changes. And overnight, yeah, oil did actually hit $97 a barrel. We'll look at that. So net this morning, we're coming in. It's very, very scattered and broken. The IBM story pulled down Microsoft, and that's a little bit of a linchpin. It's going to put pressure into that NASDAQ throughout the course of the day. That's my first focus on today's trading session. Let's come to today's bell. So the AD line out of the gate is actually more slop-tastic than maybe you would have expected. But that's kind of the price action I thought I'd see out of this morning. The ticks out of the gate this morning, and this is when we start looking at ticks. It's how many stocks are being bought over how many stocks are being sold, and the ticks are kind of a moot point. They're positive 300, which basically it's a slop fest of a marketplace. But we're seeing pretty good size bifurcations in tech. Microsoft down 2.6%. I'm just going to say this. You got to be a little surprised how well the NASDAQ is faring, given the fact that Microsoft is off by 2.5%. Meta's off by 1.7%. Tesla's off by almost 4%. A little further down, and we're talking over here, but the NASDAQ is faring, well, and you really only have two tech stocks even in the green right now. So we're going to have to let this kind of play out a little bit this morning. When we start talking about session lows, look, the overnight lows, okay, of 71.05 in the S&Ps, it was just a knee-jerk reaction that was immediately unwound. So it's an announcement. It was geopolitical risk, yada, yada, yada. It doesn't even matter what the geopolitical risk, happened to be, but the marketplace, okay, didn't necessarily interpret it correctly, and then they got clarification almost immediately thereafter. And quite frankly, it was oil that made the more substantial move. And the moment we got clarity, it even crashed down further than it rallied in oil in terms of the speed. But some very wild moves. Look, the markets, they're still seeking, if you will, any geopolitical data that they can get their grubby little paws on, and that pretty much is the name of the game. And I am watching a spread out of the corner of my eye this morning here inside of Tesla. Okay, and maybe Tesla backs off a little bit. We'll see how that actually plays out in the first couple of moments of trade. I do apologize as I'm kind of deviating a little bit here. Okay, wow, Texas Instruments lit up. Look at that. Okay, out of the gate this morning. That's interesting. It should pull back a little, but we'll see how that actually runs. And then last but not least, I'm checking some of my flip trades. Flips. Looks like American Express is chickens done. This is interesting. They actually did fairly well in their earnings, and the stock is down. But I have a pretty high probability of hitting a few of these earnings flips today. Really high probability, in fact, of hitting some of the earnings flips, specifically, in Tesla. These trades do not expire until tomorrow, so I've got all the time in the world on them. Till tomorrow's expiration is a huge amount of time. We are going to look back at some of the earnings, but before I do that, again, to kind of dig in a little bit to markets, okay, the advanced decline line today is not correlated by any stretch of the imagination, and I've been talking about this pretty consistently day in and day out. It's pretty much a 50-50 slop fest, and what that should impart upon you, is that it's going to be tech, right? That's really going to kind of run the roost in this marketplace. And tech this morning, and again, when you see this bifurcation, like if you had 95 stocks trading on one side of this marketplace, literally, if there's 95 stocks trading on one side of this marketplace, the market then kind of moves as a unit. When you actually see this 50-50 advanced decline line, it just basically breaks the market wide open. It's just become sloptastic. And the interesting, I guess, comment I would make on that is if you look specifically at these titans of tech, this is up and it's Apple. It doesn't matter. It's Apple, and Google is basically flat, and Broadcom is basically flat. It's tech itself is bifurcated. Like tech, each one of these tech companies, when they start getting to $2 trillion market caps, they're like their own sectors. I mean, one tech company, right, in some respects is bigger than any other given sector. And in some cases, when you get tech companies like NVIDIA, that is the equivalency of two sectors. Like literally, like if you looked at two sectors, if you added up all the energy companies out there, because everybody's talking about oil right now, but if you added up all the energy companies, do they even equal the market cap? Oh, I'm talking every like public energy company. Do they even equal the market capitalization of NVIDIA? Not even close. Not even close. So you have to look at tech now as its own sector. I mean, they're monsters. And I don't mean tech as a sector, but individual tech companies, as unique sectors. All right, I'm going back over to Tesla. Tesla has a bid back under it. However, before we go too far, there might be, it's Tesla, this could be a wild trade, but there might be an intraday trade. I'm showing you, the expected move, for Tesla. So stock last night, is at 386. It's expected to move $24. So where does that take it? Like right now, it's like rallied back up and everybody's like, yay. Okay, just hold that thought for a second. So hold that thought. Where does this kind of take us? So the way to kind of, calculate in an earnings would be to come in here like, okay, it's like 386. All right, just minus like the $24 to the downside, you're probably somewhere near like 362, right? 362. Did it hit 362? It did not, sir. But hold that thought, okay, to the upside. If it was what, 386, for instance, plus the $24, okay, 410, did it hit that? And the answer is absolutely not, okay? So where is Tesla right now? It's out in the middle of nowhere. And one of the favorite trades, forget about the trade that I have on right now. Forget about it. It's okay. Like I'm gonna be just fine. But one of the trades, okay, that we built a class on is trading the day after the earnings, looking for the shares to kind of ebb at right back into their expected move. So as this day progresses, okay, and you've got today and you've got tomorrow, okay, look for Tesla to hit one of the edges of that expected move. Is it actually showing? By the way, these expected moves are not during earnings. The expected moves get all messed up, so I do apologize for that. The auto expected move is not giving a good representation, but during okay, earnings, okay, the highest likelihood is of us being driven to an edge of expected move. So by tomorrow, are we going to be 410? Or are we going to be, 360? And I took my trade, okay, in that neighborhood down here. By the way, when I put the trade on, the edge of the expected move was 367. 367 was actually the edge. Tesla was moving around a lot into yesterday's close. I mean, a lot into yesterday's close. Stock had actually dipped, after I placed the trade a little bit. Nothing to see here. But the reason I'm going through this is it could be a great intraday trade. And I'm going to let this kind of open up a little bit. So that is Tesla. That's one of, the marquee earnings that everybody kind of looks for. The stock is basically now flat into it. Now, it would have given me all of what? 2 seconds to actually have traded this morning. Okay. We were so close. We were in the money. Okay. The stock, though, did, in fact, trade very, very close to the lower edge of the expected move and then ran away with it. Not exactly giving us enough time to get out, but we'll see. We'll see how this one actually plays out. And the reason I'm bringing it up and I'm spending a little time on it is I may actually trade this as the day progresses, looking for it to revert back down closer to the edge of the expected move. This thing, it has to back off a little bit before I would even consider it. Next in the docket, Microsoft. Microsoft is not earnings related. The reason I'm bringing up Microsoft is it's once again, okay, it's under pressure after this spectacular rally back. Just to show you how spectacular that rally back was, stock was actually down almost 25% on a year-to-date basis, now down basically 10% on a year-to-date basis, but it had rallied almost 20%, almost 20% move off the recent lows, kind of exceeding all expectations, breaking the expected move, huge, like, one of the biggest, 3 deviation move, and like Microsoft, just massive, and coming in a little bit today, down almost 3%. And the Microsoft story, okay, is about IBM. So IBM, okay, getting beaten up a little bit today. But before people get too excited about, oh, it's getting crushed, okay, it is actually getting crushed, and it is down $30. But what was the marketplace anticipating this move to be? And the answer was 18. But the interesting component of this, okay, IBM actually opened right where it was supposed to and then dropped. Okay, it's not dissimilar to what you're seeing inside of Tesla, where Tesla opened pretty much where it was supposed to be. Again, hopes and dreams for Tesla rolling back over. We'll see how that plays. Okay, Tesla's actually carrying the market back up a little bit right now. So again, I'm going through some of the earnings trades with you because many of you, including myself, will trade these earnings positions. Bear with me for 1 second. And he's back. All right. My voice, it's going away. Okay. Maybe I was screaming at a duck this morning. Could have been. All right. I've been known to scream at ducks from time to time, and the voice get a little crazy. Things got a little crazy this morning. I went after the duck. Does anybody remember the duck's name? Huh? Do you remember the duck's name? By the way, if anybody's new in here right now, I happen to be chasing a mallard duck in my backyard because it apparently has migrated and believes that my pool is its home. So I ran back out there this morning. Okay. That's right. Okay. It is. All right. It's Richard the duck. So my kids named him. I wasn't even here. Okay. I wasn't even here. I was on an island fighting iguanas when a duck moved in. You really, you can't make that crap up. Here comes Tesla on the turn. Damn, didn't give us time to trade it. Okay, that's when I say Tesla on the turn, like obviously I was setting up for this trade, but this was not to be, not for me anyway. This was way too much risk. Tesla's not a joke when you trade it. Like even on some of the puts that you're going to trade, like Tesla, you don't screw around too much in here. You get your head taken off. There's one other trade I wanted to bring up. This is a trade I actually did earlier in the week. And I paid 40 cents. Again, I paid 40 cents for puts that I bought in XLF, and I had closed half the position. Everybody remember that one? Okay. Now I'm actually going to close the other half of the position, even though I think I could do a little bit better in here. Okay. I think I have more than this. So, I'm closing some of the puts. Okay, closing puts. This is the other half of my position, and we're trying to get out of the contest. Okay, so for those of you, okay, does anybody still have that? Okay, it's not Howard the Duck, it's Richard the Duck. You get your duck, you get your ducks in order. All right. Just remember, the duck definitely started it. The duck started it. Oh, this is just getting crazier. Okay, let's get crazy. Look at Texas Instruments. So in Texas Instruments, okay, this thing was actually slated to move 16 bucks. Move right now. That's wild, right? You're actually seeing a 2 sigma move. The mighty 2 sigma move. It's not over yet. This is another one that could absolutely pull back, but the S&Ps themselves would have to actually sell off quite considerably. Quite considerably. So here we are once again into a bit of a slop fest. All right, of a trade here. Why are we waiting on these fills in here? Come on, man. All right. What the hell do I even have left in here? Huh. That don't make no sense. All right. Just looking at a few positions. I have 2 left, but I filled 1. All right. All right, so I'm going to leave those other ones to work. So I am closing the rest of my XLF position. Now I want to clarify. I have another XLF position on. Like I have an in-out spread on. I'm not closing the in-out spread. Okay, what I'm closing was a trade that I did, okay, I believe on Tuesday, okay, a trade that I did on, was it Tuesday? What the hell what day did I trade it on? Okay, yes, all right, Tuesday. I put a trade on Tuesday, and it was a bearish position looking for the XLF to roll over and kind of, ebb down. And so we were able to get into this trade right towards the high of the marketplace. It doesn't look like much, but a very minimal percentage move in XLF. We picked a very, very high gamma option, okay? And 40 cents all of a sudden becomes, $1. And I think it's pretty good risk reward in there. So I'm going to work the other trades. We're back down to 52 inside of the financials. And the financials, they're not really weighing on this market at all. I mean, here we go again. All the financials added up. Does it even equal the market cap of Microsoft? Probably not. Okay, I mean, and that includes JP Morgan and all the rest of them over there. Yeah, let's go onward and upward. Okay, yeah. So Walmart, this is a trade that I put on yesterday. Okay, the trade in Walmart was a slightly out of the money spread. And again, to clarify, I purchased an out of the money spread. Okay, what's the rest of my position? I know I did a bunch of these, but I purchased an out of the money spread, and I purchased an out of the money spread. Okay, with kind of one very simple thought in mind. Let me create a duplicate order here. Very, very simple thought in mind on the Walmart spread. Walmart, okay, is going to either match or exceed its highs, and that retail trade will just grip hold of this, okay, and pull it 136, 137. And that's it. That was the entire logic of that trade. It couldn't have been more straightforward. Okay, filling the rest of the XLF. So XLF, we're getting out. So what else do I have in a 6? Cancel replace order. It's coming here at 105. Okay, I know there's a lot going on this morning because look, you show up every day and you're going to see all the trades pretty much opening and closing. But this is the remainder, again, the remainder of a position. Okay, I'm actually going to put that one in the chat. Okay, say closed. Closed remaining. All right, so we closed out of the remaining half of the trade. Okay. Oh, Meta yesterday went to nothing. Okay, Meta went to nothing, and that's why like you start talking about like allocation. You have one trade, that made like 120 or 130%, and another trade that went to zero. Okay, what's the most important thing between those two trades? First of all, never look at them autonomously. So it's a great point. So if you take a look at a meta trade from yesterday, I had a meta trade yesterday, it went to zero. Okay, take a look at a meta trade yesterday and take a look at the XLF trade I did before it. How did you allocate? How'd you allocate? Because what a lot of people will always complain about is they're like, oh, but the meta trade was so much bigger. I'm like, whoa, what do you mean the meta trade was bigger? And you got to allocate the exact same amount of capital to meta, okay, as you would have allocated, okay, towards the XLF. Why? Because if you lose 100% on one trade, but you're making 120 or 130 or even 140%, okay, on another trade, it was a 40 cent open. When you're doing that, you have got to, at minimum, be making 100%, especially on these intraday trades. At minimum, when I say minimum, you got to make 100% on an intraday trade. You're pulling off a 0 DTE trade. If you're allowing one position to go to 100% loss, then the positions that do make money at minimum would have to make 100%. That's just to be able to break even. Okay, so when you're hitting trades like in the XLF, my combined position in the XLF made 135%. Okay, there's only edge sustainably. Okay, when you don't look at trades individually, and I cannot stress that enough. There's only edge. Okay, over time, if you can't, you have to break out as a retail trader of looking at trades autonomously. That is one, okay, of the biggest downsides, if you will, of like retail trade is, people believe that your trade in XLF lives in a different kind of paradigm than the trade in, for instance, Meta, where it absolutely does not. You have to consider allocation, especially in an intraday basis. It's crazy because I could do everything right and I could send you trades. You have got to allocate effectively. It's funny because today I'm going to go right after this, and I'm going to go into doing a Superfly webinar. This is Superfly Mastermind. This is week 4 of the Superfly Mastermind. And in week 4, it's the single most important week, in my opinion. It's about allocation. It's about multiple trades. It's about outcomes. And it's funny because that's like the first thing that you learn in the professional trading world, okay, is that no individual trades matter. And like if you as a trader, okay, if you come into the trading world and you believe like Microsoft is the greatest stock ever, I'm going to invest heavily in Microsoft, you're already dead. Okay. And by the way, you would not be employed long in the trading world. Every trade, okay, needs to be looked at, and it's terrible to use gaming analogies, but every single trade you do has to be looked at as if it's a roll of the dice, because there's things in this business you can control and there's things in this business you cannot control. But when you are trading something, especially, okay, especially some zero DTE, the trades that you place have got to be so equal, okay, so equal. The Superfly Mastermind's always the same time. It's 8 o'clock Pacific time, right? 8 o'clock Pacific time, 11 a.m. Eastern time. All right, so onward. Onward and upward. Allocation. I'll beat up allocation if you guys want a little bit tomorrow while I'm live. You know, I had some really detailed notes for today, but I'm pretty enthralled with looking at some of the price activity in here. So Tesla is, don't be surprised. Tesla's going to come right back down. Like people go, holy crap, I didn't see that one coming. I'm just pissed off that I didn't actually get the trade on. Okay, and I'm not joking. I'm actually quite pissed off at myself. I don't usually ever say that. Okay, because this is one where I'm freaking staring at it for the first 10 minutes this morning, you know, feeling like it's going to come back. Although I will say this, I don't know if Tesla gets all the way down, okay, into like, you know, 365 territory. I don't know if it does it today or if it actually kind of meanders a little bit and hits it tomorrow. But one way, shape, or form, okay, this one is, it's going to get interesting. It's going to get interesting for sure. I am, you know, unfortunately, okay, surprised that the S&Ps are only down 6. And I say unfortunately, like you have to realize, I know exactly where we are in the week, and that's that line right there in the middle of your screen, that line, that is unchanged in the SPX for the week. So I am telling you right now, strap in, it's about to get volatile. I do kind of want to bear up a little bit today because I think we've got some geopolitical risk that could possibly hit the tape. I mean, this marketplace, in the XSP, this is expensive. I don't want to pay $1.35. By the way, I'm jumping around topics over here a little bit because I'm already pricing trades in my head. I want to bear up a little bit today, looking for markets to actually descend, not necessarily that far, but okay. These are some funky strikes. Look at this. It goes 13, 12, 11, okay, 10, 9. But the funkiness in here, the funkiness. I'm already calculating stuff in my head. It's funky strikes. It's funky to make like a $5 wide spread in, like a 13,708 spread. I don't love selling an option, okay, for 30 cents, but you got to protect yourself in this particular case. I'm actually going to take the shot right now. And here's another one where, why am I using a spread? Okay, why not just go for it? Because I want to mitigate some of the volatility exposure in here. Okay, and this is a 0 DTE opening trade. That's a 0 DTE opening trade. And we do not send those out to the masses, okay, but you are welcome, okay, to trade that with us here this morning. Hopefully most of you are able to get into it and be timely. Like, what do I like about this trade? By the way, sometimes I got to fire first and explain it second. What do I like about this trade? Okay. First, okay, why am I putting the position on? Well, I can see that the volatility is up, but it's negligible, right? So volatility is up. So the market's kind of like, maybe we have risk. I can see that oil is up. Maybe that's going to create a little bit of risk. But the standout to me, okay, filled another one, but the standout to me today has got to be Microsoft. Like, it is, like, could the market rally today? Absolutely. I'm not going to dispute that. You got Microsoft weighing on it. It's 3%. That's a lot weighing on the S&Ps. Why is it a lot weighing on the S&Ps? Oh, I don't know. It's $3 trillion of market cap. Then you have Meta. Meta's down 2%. Okay. That's another $1.6 trillion of market cap kind of weighing on the marketplace. But then you have Tesla, which is $1.4 trillion, and it's headed south right now. Okay. So you start to add up some of the market capitalization. You look at the NASDAQ and you go, what the hell? Okay. You're right. What the hell is the right? That's the right thing. How could this possibly be sustained? Because Broadcom, okay, is our savior. Then we have the financials that are kind of leaning on market right now, but they're not down that much. Okay. It's really, if the market stays like this, okay, I'm just assuming that the pressure kind of caves the market because we can't get out of our own way. Like it's really hard to have a rally. It's really hard to have a rally with some of these titans of tech that are down this much. So I kind of figure they'll throw in the towel as the day progresses. And if they do that, I want to be part of it. Now, the advanced decline line, you're like, oh, but the advanced decline line's getting better. We've talked about this, okay? Maybe not today, but we've talked about the fact that the advanced decline line could get a lot better today. It's not going to matter, though, if the big tech companies are down, okay? And again, financials, they definitely have some weight. No question about that. They've got some weight. Home builders are off a little bit today. They're not worth anything, okay? It's so weird to say that, too. Like home builders, it's not worth anything. Okay, healthcare is actually a joke in terms of size. Honestly, healthcare is a joke. So I think the market's going to get weighed on. Now, why, okay, did I do a spread? Why did I use a spread? Why didn't I just go for it and just buy a put? Okay, excuse me. The volatility looks a little bit excessive, okay, versus where we're at, and I was just trying to price, okay. This $5 wide spread, you're like, I don't even want to sell these. That 30 cents though, okay, is worth it. So it's worth it to collect. I'm risking basically $1.10 to be able to make like 390. And I think it's, look, if we trade down below 708 today, great. I mean, that's a big move though in markets. And today the expected move today is about close to $50. So, nothing to see here. Nothing to see here. And by the way, Walmart is kind of doing its thing. I'm not, okay, here to close Walmart for like a 30% gain. So allow me to tell you that I'm not here to just close out of Walmart. All right. Speaking of Walmart, Tesla is now in the money. Okay. Tesla is now in the money. I'm going to give it a little bit longer. Okay. When I say it's in the money, I have an earnings butterfly on a flip, okay, and the flip is up about 120%. But this thing, it's got plenty of time, okay, plenty of time. And when you're looking at it, you're like, son of a, you can't believe that it flipped back over on the day, right? I mean, literally, if you're looking at this, you're probably like, holy crap, okay. I wasn't concerned at all about Tesla, not at all. There's enough options order flow in here. It's like the line on a game, and the line on this game is a few $100 billion, okay? They've already traded almost 1 million option contracts in here today. So let the marketplace do its thing. Let the marketplace pull Tesla back into alignment, okay? And we'll take our shot. I like this one. It's like, it's down 200%. You can't lose more than 100% in a butterfly, okay? And then let me look at American Express again. How's American Express doing, okay? Oh, American Express is really getting beaten up now. That one's toast. Okay. Couple of bearish trades. All right. So American Express is going to be out of the money. And then Texas Instruments. These are trades that I have on. The Texas Instruments is a full-blown like 2.5 sigmas. Wow. Okay. Apparently they're making good stuff over there. Good stuff. Okay. I know that some of you still have your little TI-85, your little pocket protectors, okay? Don't, come on, admitting it's the first step. Living in the basement, okay? I don't have basements in California, so it's getting very difficult to make fun of people, okay? Canada, no, I'm not making fun of Canada anymore. We moved on to California, except there are no real basements in California. So I don't know where we're going with this one, okay? The Yeah, the rest of the earnings that were out, nothing like all that awe-inspiring. I mean, IBM, okay, IBM is probably the most wild out of the earnings, and it is definitely outside the expected move by about $10, but like nothing too crazy. Like I'm not like shocked on IBM, but I'm shocked how well the marketplace is holding it together though right now with Microsoft down. That one is a little bit of a shocker. Um, Tesla, as I'm speaking here, is just okay pulling right into okay where we'd like it. But it's early in the day. Again, stock's taking a little bit of pressure. S&Ps now, okay, have cracked a bit more. So, and I don't want to tell you that my timing, okay, I don't want to sit here and tell you, oh man, his timing on that trade was awesome. Okay, I'm not here to try to time a market on a zero DTE. Okay, I'm not here. I'm not going to try to time the market. What I will tell you though, on the XSP position, okay, if you can get out of like half your position, for like 115, 120% early on, do it and then just let the rest of it sit until close to expiration. Expiration's today, so that's that's kind of good money management in that particular case. I do believe we're going to have Tony Rago coming on here momentarily. Tony! He's not here yet. Okay. I don't know where he is. He's probably getting like an espresso. That's what he does. Okay. Yeah, look at that, the financials. I could have gotten out better. By the way, I don't ever look back at trades and be like, I could have been somebody. Okay. No, probably not. But that's all right. Fibonacci's made you do it. Okay. Yeah, I don't. If you think I'm good at timing, okay, I missed this one for sure. I missed that one. Missed it on the turn. Okay. I am a little confused this morning. I don't mind saying that. Okay. Why we're not down more in NASDAQ land. Okay. It's quite amazing the impact in NASDAQ from Broadcom. I mean, Broadcom is like a little bit of a sleeper stock. Like no one seems to be paying attention to the fact that Broadcom, check this out, picked up an absolute proverbial crap load of market cap, because Broadcom now is bigger than many of your tech stocks, including Meta, okay? Of course, Tesla, right? Amazon's still bigger than it. Obviously, Microsoft's bigger, Google's bigger, Apple's bigger, but Broadcom has come a long way. And if you're curious as to why the NASDAQ is not, flopping over right now, it's because you've got a decent sized bid in a $2 trillion company, okay, against Microsoft taking a hit. My question though in Microsoft is pretty wild. It's only, did you know Microsoft's only $1 trillion more now than Broadcom? It's only $1 trillion. Okay. How the hell did we get to this point, Tony, where we're talking about like multiple $1 trillion companies? Okay. And everybody thinks that that's normal now too. You over there, big guy? You getting involved over here?
I'm here, man. I'm listening to the commentary.
I'm having conversations in my head this morning. It's happening. Okay. A lot of conversations in my head. So I'm pissed at myself for like, I don't often say that, but I'm pissed at myself for missing an intraday trade in Tesla. It's because I'm live over here. I couldn't take the pressure. Actually, I don't really care. I could be live, not live. I still have the same conversations, whether the microphone's on or not. That's the way to trade is start yelling at yourself. You're like, oh, you bastard. The conversations get a little bit more R-rated when I know that the microphone is like, muted. But other than that, we're good to go. So I did a lot this morning. I made a little bit of a mess. Apologize to those of you that are probably brand new. They're like, what the hell just went on there for the first hour today? It's okay. We'll catch you guys up. I'm on a little bit of a shorter session today. Tony Rago is going to take over here for the next 55 minutes. But ladies and gentlemen, I am going to be back. Okay, I'm coming back, baby. And I'm going to be talking about Judgment Days. That is 11 a.m. Again, 11 a.m. Pacific time. So in about an hour, I'm going to go do a mastermind, and then I'm going to come back into chat for about an hour and a half, 11 a.m. Pacific time, and talk to you about Judgment Days. Tony Rago, sir, it is all yours. S&Ps right now, they're hanging in there. Just down 13 handles. I'll let you guys know what I do with the XSP trade as the day matures. But remember, XSP is a cash settled instrument. You don't have to panic out of it into the close. Tony, all yours.
Thank you, sir. How's everybody doing? So we